Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So we have started the problems on ratio analysis. Last video, 6 short problems we have completed. Now in this video, 3 more problems I'm going to complete, that is 7th, 8th and 9th. So all the problems on ratio analysis are based on the formulae and their significance. So without understanding the significance and without remembering the formulae, you cannot proceed to understand the problems. So my suggestion, if you have not watched the theory videos, go to the playlist of my channel. Select the subject financial decision making. Select the topic ratio analysis. Watch the initial 4 videos. You can get the complete, grip on the formulas and significance of each of the ratios. Then only you come to the problems, you will understand. Otherwise, it will be highly difficult. So before starting the 7th problem, I expect my viewers to have a printout of the problems which are given in the link under my description. Always keep it ready. Take the screenshot of the solutions of 7th, 8th and 9th problem, then I'll explain. See the problem number 7. Given opening stock 28,000, closing stock 32,000. So whenever opening stock and closing stocks are given, we can calculate the average stock, and sales are 3,20,000. Earlier it was called sales. Nowadays it is called revenue from operations. Name is changed, but revenue from operation means sales. Gross profit ratio is 25% of sales. Calculate stock turnover ratio or inventory turnover ratio, means same. So only one ratio it is asking you, stock turnover ratio. The formula for stock turnover ratio is cost of revenue from operations divided by average stock. So what do you mean by cost of revenue from operations? It is nothing but cost of goods sold. Earlier it was called cost of goods sold, now it is called cost of revenue from operations. So first of all, gross profit is 25% of sales. Sales are given in the problem 3,20,000. So 25% of 3,20,000, it comes to 80,000. This is the gross profit. Now remember the formula, cost of goods sold, COGS, is equal to sales minus gross profit. Sales are 3,20,000 given in the problem. 80,000 is the gross profit we have calculated. So 320 minus 80, you will get 2,40,000 cost of goods sold. And this cost of goods sold is nothing but cost of revenue from operations. So cost of revenue from operations is cost of goods sold, 2,40,000. And average stock formula, opening stock plus closing stock divided by 2. Opening stock 28,000, closing stock 32,000. So 28 plus 32 divided by 2. 30,000 is the average stock. Now simply substitute in the formula. Stock turnover ratio is equal to cost of revenue from operations, that we got 2,40,000. So 2,40,000 divided by average stock 30,000. So 240 divided by 30, you will get 8 times. So stock turnover ratio is 8 times. What does it mean? In 1 year, 8 times stock is converted into sales. The stock is converted into sales. That's it. This is the end of 7th problem. See the 8th problem. Problem number 8. Following are the ratios relating to the activities of national traders. This is the 9th problem. So 8th problem is calculate the receivables turnover ratio from the following figures and explain its significance. Not only it is asking you to calculate, but also to give the significance of this ratio. Which ratio? Receivables turnover ratio. The formula for receivables turnover ratio is net credit sales divided by average receivables. So net credit sales, it is not directly given. It is given total sales and cash sales. Remember, 2 types of sales are there, cash sales and credit sales. So total sales is equal to cash sales plus credit sales. But we want credit sales. So credit sales is equal to total sales minus cash sales. So total sales are given 1 lakh. Cash sales are given 20,000. So 1 lakh minus 20,000, 80,000 is the credit sales. We got credit sales. Now we need average receivables. Average receivables means opening receivables plus closing receivables divided by 2. Now opening receivables means 1st January 92 and closing means 31st December 92. When we say receivables, it includes bills receivable also. So opening receivables include debtors and bills receivable. Similarly, closing receivables includes debtors and bills receivable. So bills receivable should be added to get the total receivables. So opening receivables are opening debtors 10,000, opening bills receivable 7,500. The total opening receivables are 17,500. Similarly, closing receivables, the closing debtors are 15,000. Closing bills receivable is 12,500. So closing receivables are 27,500. So we got opening receivables, we got closing receivables, we can calculate average receivables. Average receivables is equal to opening receivable plus closing receivable divided by 2. So 17,500 plus 27,500 divided by 2, you will get 22,500. This is the average receivable. We got the credit sales, we got the average receivables. Easily substitute the values, you will get the receivables turnover ratio. So receivables turnover ratio is equal to 80,000. What is this 80,000? Net credit sales. Divided by average receivable 22,500. So 80,000 divided by 22,500, 3.56 times. That means receivables are converted into cash 3.56 times a year. So what is the significance of this ratio, it is asking. What is the significance? What is the importance? Why we calculate receivables turnover ratio? So receivables turnover ratio indicates how many times we can be able to convert. How many times we can be able to convert the receivables into cash. The receivables into cash. So a high ratio indicates less credit period is allowed and customers are paying very frequently. A high term ratio is better. So if the ratio is high, more, it indicates that we are allowing less credit period and the customers are paying us the amount frequently. We are recovering the amount from the customer frequently. That indicates a high receivables turnover ratio. So it is better if we keep a high receivables turnover ratio. That's it. Next, 9th problem. See carefully, 9th problem. It's a lengthy problem, so concentrate more. Very important one. From the following are the ratios relating to national activities of National Traders Limited. The company name National Traders. Debtors velocity 3 months. That means we are recovering the cash from debtors every 3 months. Similarly, stock velocity 8 months. We are converting the stock into sales every 8 months. Creditors velocity 2 months. That means we are paying the amount to creditors every 2 months. And gross profit ratio 25%. Gross profit for the year ended 31st December is 4 lakh. Closing stock for the year is 10,000 above the opening stock. We don't know how much is the opening stock. The closing stock will be 10,000 more than opening stock. Bills receivable amounted to 25,000 and bills payable amounted to 10,000. Then find out closing stock, sundry creditors, sundry debtors. The 3 questions are asked. You have to calculate the closing stock, you have to calculate the sundry debtors and sundry creditors. The 3 items. National Traders Limited, we want closing stock, we want sundry debtor, we want sundry creditor. Now, we have to extract the information from the problem and calculate these 2. We begin with gross profit. The gross profit for the year is given as 4 lakh and the gross profit ratio is given as 25%. That means 25% of what? Of sales. In other words, we can say if sales are 100, gross profit will be 25. That is the meaning of 25% gross profit ratio. For every 100 rupees of sales, we are getting 25% gross profit. So I am putting it like this. When sales are 100, gross profit will be 25. When gross profit is 4 lakh, actual gross profit for the year is 4 lakh. So for 100 rupees of sale, 25 GP. When GP is 4 lakh, how much would be the sales? So 4 lakh divided by 25 into 100, you will get 16 lakhs. That means sales for the year is 16 lakh. That is not given in the problem. By using this GP ratio, by using the gross profit, we have calculated that the sales will be 16 lakh. Now we can confirm whether our answer is correct or not. It is given that gross profit is 25% of sales. So sales we got 16 lakh. Now you calculate 25% of 16 lakh, you must get 4 lakh. Take the calculator, calculate it. 16 lakh into 25%, you will get 4 lakh. That means our calculation is correct. Sales are 16 lakh. Now cost of goods sold, COGS. The formula is sales minus gross profit. Sales are 16 lakh. Gross profit given in the problem 4 lakh. So 16 minus 4, 12 lakh is the cost of goods sold, COGS. Now we'll calculate one by one. Stock velocity is given in the problem 8 months. By using this stock velocity, we can calculate stock turnover ratio in times. This stock velocity is given in months. Now I want to convert it into times. How many times we can convert the stock into sales? So 12 months in a year. So 12 divided by 8, it comes to 1.5. So 1.5 times we are converting the stock into sales. Now what is the formula for stock turnover ratio? COGS by average stock. COGS, cost of goods sold, divided by average stock is equal to 1.5. COGS already we have calculated 12 lakh. So 12 lakh divided by average stock is equal to 1.5. Now if I make a cross multiplication, 1.5 average stock is equal to 12 lakh. So average stock is equal to 12 lakh divided by 1.5. You will get 8 lakh. We got the average stock 8 lakh. But we don't require average stock. We want the closing stock. Now we got average stock. Now one point is given in the problem. Closing stock is 10,000 rupees more than opening stock. That sentence is given. So first of all, we suppose, let the opening stock be X. The closing stock will be X plus 10,000. The closing stock is 10,000 more than opening stock. So opening stock X, closing stock will become X plus 10,000. That is our assumption. Now, average stock. The formula for average stock is opening stock plus closing stock divided by 2. So average stock we already got it 8 lakh. So in place of average stock 8 lakh. Opening stock we have supposed X and closing stock will be X plus 10,000 divided by 2. So 8 lakh is equal to, here I have written 80,000, it is not 80,000, it is 8 lakh. 8 lakh is equal to 2x, x plus x, 2x plus 10,000 divided by 2. Now if I make a cross multiplication, 2x plus 10,000 is equal to 8 lakh into 2, 16 lakh. Now 2x is equal to 16 lakh, take this 10,000 to RHS, it will become minus 10,000. So 2x is equal to 15 lakh 90,000. X is equal to 15 lakh 90,000 divided by 2, 7 lakh 95,000 is X. What is X? Opening stock. X is the opening stock. So we got the value of opening stock 7 lakh 95,000. Now easily we can find out the closing stock. Closing stock is 10,000 rupees more than opening stock. So 7 lakh 95,000 plus 10,000, 8 lakh 5,000 is the closing stock. That's it. First answer we got closing stock 8 lakh 5,000. Got the answer? Only manipulation of the numbers. Formulae you have to remember. That's it. Now, second, debtors velocity. In the problem it is given debtors velocity as 3 months, but we require in times. So 12 divided by 3. Debtors turnover ratio is 12 divided by 3, 4 times. In 1 year, 4 times we are converting the receivables into cash, right? So debtors turnover ratio, what is the formula? Net credit sales divided by average debtors. But average debtors we can calculate only when opening debtors are given. In the problem, no mention is there regarding opening debtors. So denominator we can take closing debtors. The original formula, average debtors we should take in denominator. But due to lack of information, we can take closing debtors. So net credit sales, already we have calculated 16 lakh. And average debtors, in place of average debtors, I am writing closing debtors is equal to 4. Now cross multiplication, 4 closing debtors is equal to 16 lakh, closing debtors is equal to 16 lakh by 4, that is 4 lakh. Now this closing debtors includes bills receivable. So whenever we say debtors in this debtors turnover ratio, debtors must include bills receivable. So this closing debtors of 4 lakh rupees is bills receivable is included in this debtors. Now we remove the bills receivable. How much is the bills receivable given in the problem? 25,000 rupees bills receivable opening. That is given in the problem. So the above closing debtors include bills receivable. So closing debtors 4 lakh less bills receivable 25,000. So 3,75,000 is the sundry debtors. Second answer we got 3,75,000. Now third, we have to find out sundry creditors. So creditors velocity is given in the problem 2 months. Every 2 months we are making the payment to creditors. So how many times in a year? 12 divided by 2 is 6 times. So creditors turnover ratio is 6. The formula for creditors turnover ratio, net credit purchases divided by average creditors. But average creditors we cannot calculate because opening creditors are not given. So denominator we can take closing creditors. Instead of average we take the closing. So net credit purchase divided by closing creditors. Now we don't have purchases. By using the formula of COGS, we can find out purchases. COGS, cost of goods sold, formula is opening stock plus purchases minus closing stock. Opening stock plus purchase minus closing stock. COGS already we have calculated 12 lakh. Cost of goods sold 12 lakh. Opening stock here we have calculated 7,95,000. So in place of opening stock 7,95,000. Plus purchases we don't have, we have to calculate. Closing stock 8,05,000. I am substituting 8,05,000. Now bring all these values, figures on left hand side and keep purchases on right hand side. So this 795 will become minus. So 12 lakh minus 7,95,000 minus will become plus 8,05,000. We are changing the side. The RHS items are taken on LHS. So plus will become minus, minus will become plus. So ultimately purchase is equal to 12,10,000. Purchases we got. Now we substitute in the formula. Net credit purchase by closing creditors. So 12,10,000 divided by closing creditors is equal to 6. Now cross multiplication. 6 closing creditors is equal to 12,10,000. So closing creditors 12,10,000 divided by 6. You will get 2,01,667. That is the closing creditors. But closing creditors includes bills payable. Just like closing debtors include bills receivable, closing creditors includes bills payable. Deduct bills payable, will get sundry creditors. So closing creditors are 2,01,667 and bills payable is given in the problem 10,000. So deduct 10,000, 1,91,667 is the sundry creditors. 1,91,667. All the 3 answers we got. So in this video, 3 problems I have explained in detail. If you want the complete command of the subject, watch the video, every video till the end. Don't skip in between. And keep the video, watching the video in rhythm. That means first video, second video, third video. Don't join in between. You cannot be able to understand. So my best wishes are always with you. Be blessed with immense knowledge. So if you're satisfied with my lecture, give a like to the video. Give your comments. Share my channel in your friends, in your families, so that more students can be able to watch the video and enhance the knowledge. And do subscribe if you have not yet subscribed to my channel. Inshallah, we'll continue the next problem in the next video.